Good afternoon and welcome to NYFP. In midday trade on this Tuesday, the major U.S. stock averages have come off earlier highs. Joining me now is Peter Cardillo of Rockwell Global Capital. Good afternoon, Peter. Thanks for joining me.
Good to be back.
Well, we opened with record highs for the Dow and S&P 500. We saw the Dow break above 15,600 and the S&P 500 hit a new record high, eyeing that 1,700 level. Now, we got better than expected earnings out from some blue chip companies, but we got some weakness in terms of economic data. So what do you expect to see heading into the close today?
Well, you know, I kind of suspect that we'll probably have a mixed session, and I wouldn't be a bit surprised to see both the S&P and the Dow close at new record highs, even though the S&P right now is a bit under pressure. But I kind of suspect, you know, the market has had a nice run up here, and we should expect some sort of a pullback somewhere along the way. Now, that's probably going to come in the form of intraday corrections, something like we're going through now. And of course, you know, the bullish sentiment continues to grow. And if you look at today's earnings, certainly it was all about earnings, not about economic data. We only had one or two pieces of economic news today, and of course the Richmond Fed business surveys, which actually was worse than expected. We saw a decline of about 7 or 8 percentage points. As opposed to the previous reading. So I think it's all about earnings, you know. DuPont certainly led the way in terms of good earnings, and I think that this will continue.
And Peter, as you mentioned, earnings continue to be in the spotlight. Today we're seeing the Dow gains on the heels of DuPont's latest earnings reports, but more importantly, their exploration of a spin-off of their performance chemicals unit. And yesterday we saw McDonald's weigh on the Dow, so it'll continue to be all about earnings this week. But as we head into next week, we have the Fed, the U.S. GDP, and the jobs report. So what are your expectations?
Yeah, well, then of course, you know, that's when things are going to change again. And I think what we're going to see is obviously the first glimpse of Q2 GDP is going to be somewhere between around 0.5 to 0.75%. So you can see economic activity in the second quarter was rather weak. And that takes us back to another point here, that notwithstanding the weakness in economic activity in the second quarter, earnings still are coming in a little bit better than expected. So that's a good sign in terms of the market's fundamentals. Then, of course, you know, we have the Fed, and of course we have the unemployment data, which obviously, you know, is going to probably stay within the growth mode that it's in right now. I'm looking for less than 150,000 new farms payrolls created last month. And of course, most of that again is going to be in terms of temporary employment. So that just sends out a signal to the bond market that probably yields are going to move lower, and I continue to believe that we're going to see the 10-year move down to around that 2.35% sometime during the month of August. So that just means any pullback we get in the market will be shallow, and the summer rally continues.
Peter, we'll keep an eye on those levels, but you mentioned central banks as well as growth. Now, heading into tomorrow's session, we'll get global flash PMI manufacturing out from China, the Eurozone, the U.S. for this month. But speaking of growth, over in China, there are new expectations of possible stimulus measures coming out from that nation, and that helped boost sentiment in Europe as well as Asia as we came into today's trading session. What's your take on that?
Yeah, well, you know, that goes back to what we've been saying all along, that the slipping economic activity in China would have to have some sort of support from the central bank. Now, whether or not they lower interest rates or whether they add stimulants, it's basically the same. We're still winding up with some sort of support, and that's exactly the reason why we saw the global markets all higher this morning. In fact, we besides the earnings, we're up on the news of on the Chinese media releases that indicated that China is probably going to boost their infrastructure, and that means more stimulants.
Okay, Peter. Well, thank you so much for joining me on this Tuesday, and I'll speak to you Friday after we get more earnings reports.
My pleasure.